How is capital being used in the business? According to economists, capital is essential to the operation of any unit, be it a family, a small firm, a major corporation, or an entire economy. On the balance sheet's current or long-term sections, capital assets can be identified. These assets could consist of cash, cash equivalents, marketable securities, manufacturing tools, manufacturing facilities, and storage facilities. In its broadest sense, capital can serve as both a gauge of wealth and a tool for accumulating more wealth. The net worth of an individual includes capital and capital assets. Companies have capital structures that specify the proportions of working capital, equity capital, and debt capital that they use to fund ongoing expenses. Cash or other liquid assets are often held or acquired for use as capital. In a more general sense, the phrase may be used to refer to all of a company's monetary valued possessions, including its inventory, real estate, and equipment. However, capital is cash flow when it comes to budgeting. In general, capital can serve as both a gauge of wealth and a tool for generating more wealth through investments in capital projects or direct investments. Individuals' net worth includes capital and capital assets. Companies have capital structures that include working capital for everyday expenses, equity capital, and loan capital. The success of people and businesses depends on how they finance their working capital and invest their acquired capital. Companies employ capital to finance continued production of goods and services in order to generate profit. In order to create value, businesses invest their cash in a variety of different things. The two most typical categories for capital allocations are labor and building expansions. A corporation or individual who invests capital hopes to outperform the cost of the capital. Economists examine financial capital at the regional, national, and international levels to determine how it affects economic growth. Economists monitor a number of capital metrics, including personal income and personal consumption. From the personal income and outlays reports of the Commerce Department, the Gross Domestic Product report for the quarter includes information on capital expenditures as well. Normally, the capital structure of a corporation is used to evaluate both business and financial capital. As mandated by the central banks and banking rules, banks in the United States are required to maintain a minimum level of capital as a risk mitigation requirement, sometimes referred to as economic capital. It is the responsibility of other private enterprises to determine their capital requirements, capital assets, and capital standards for corporate investment. The balance sheet is carefully examined for the majority of the financial capital examination for organizations. That's all for today's video. Let me know your thoughts in our comments section. Like, share, and subscribe.